smokers, people, my snell, just delivered earnings. Ho-ho! Welcome back to Strongman Personal Finance. I'm getting ready for tax season, and if you want me to do your taxes, see the pinned comment below. I am a certified public accountant, and I am smarter than you. In this video, we're going to cover the third quarter 2024 results of PayPal Business, because apparently, according to Jeremy LaFefe, this thing is going to 10x. It's going to be 1,000x. It's going to be worth more than Apple and Saudi Aramco combined. Now, PayPal's down 4% on the day, and it's down 0.16% in the after hours. And if we look over the past 5 years, the stock had a massive run-up during the cloudemic, collapsed, and now it's had a slight recovery. But Jeremy, of course, has a cost basis at the exact bottom because he's a freaking genius. So, why did the stock sell off? Well, let's see. Net revenues increased 6%. Okay, that's decent growth. I mean, for a company that you would expect to grow 10x, 6% revenue growth just doesn't seem like it's got it. You know what I'm saying? Transaction margin has increased 8%. So transaction margin, their profit from transactions before other expenses, has increased a little bit faster than revenues. That's good, okay? GAAP operating income has increased 19%. So you see some positive metrics. Margins are going up, both on basically cost of goods sold and operating. And earnings per share has also increased 6%. So EPS has roughly grown in line with revenue. Now, it says non-GAAP EPS increased 22%. Non-GAAP equals hot, stinking, steaming trash, okay? Let's look at the operating results. Total payment volume increased 9%. Okay, that's good. But notice, payment volume increased 9%, but revenues only increased 6%. Payment transactions increased 6%. Payment transactions per active account on a trailing 12-month basis increased 9%. But here's the rub, boyos. Like we keep saying on every single video, active accounts increased 0.9%. That's right. They've basically peaked with active accounts. And now the only way PayPal can grow profits is by squeezing as much money as they can from their current account holders. Now, maybe they'll be able to do it. Maybe they can grow earnings per share, buy back shares, etc., etc. But this is not a 10x stock. This is a highly competitive industry. Is this hard to understand? Where's the 10x? I'm trying to figure out what the market's not seeing that Jeremy's apparently seeing. Oh wait, he's a con man clown. Cash flow from operations, $1.6 billion, and free cash flow of $1.4 billion. So about $200 million of capital expenditures. Pretty strong cash flow. I mean, you know what I'm saying? And let's see, balance sheet liquidity. Cash equivalents, and investments totaled $12 billion, and debt totaled $12.4 billion. And they returned $1.8 billion to stockholders by repurchasing approximately 28 million shares of common stock. So you're getting a positive return from PayPal. It's a profitable business, and they're using cash to buy back shares. And it's a tax-efficient way to do it, and the stock is quote-unquote cheap, according to Jeremy. So if you think the stock is going to do amazing, maybe the buybacks are happening at a good time, okay? But I don't see this as a market-beating stock. You know, like, what is the market missing? I always ask that. What is your advantage over the market? Oh, wait, you don't have one because you're a freaking clown, okay? So we can go skim the financial statements real quick. I want to see. I don't really worry about the balance sheet too much. I mean, I don't think they're going bankrupt anytime soon, okay? So we see revenues and transaction expenses roughly grew in line. They grew revenues. They basically saved money on transactions. They increased their margins just a little bit, but nothing like material. Okay. Credit losses have decreased. Okay. Customer support, they did cuts. They increased spending on sales and marketing. They spent a little bit more on tech and development year over year, but really not that much. A little bit more on admin, and a little bit more of restructuring costs, okay? And their operating income grew pretty significantly. So a combination of cutting some expenses here and there and, you know, slightly increasing transaction margin has led to operating income growth and EPS growth because they're buying back shares on top of that. But at the end of the day, how much more can they squeeze? I'm trying to understand, okay? I don't really freaking see it. Let's look at the cash flows. All right, so for the 3 months ended September 30th, 2024, they generated $1.6 billion of operating cash flow versus $1.2 billion in the prior year. What is the big difference? Trying to see what any significant difference here is. I mean, the net income is basically not that different at all. I don't really see any major changes that would account for this. Maybe a little bit of difference in originations of loans receivable is why their operating cash flow went up. But at the end of the day, they're really not growing, okay? So in the long run, this business is going to have a hard time really, in my opinion, outperform the market, okay? I mean, you can see transaction revenues quarter over quarter. I mean, that's not necessarily the best metric, but negative 1%. 6% for last year, but negative 1%. For the quarter over quarter. That's not good. Revenues from value-added services. Grew 7% versus 10% the prior year. Wow. Crazy. Okay. Roughly more than half of their revenue comes from U.S. So international saw a little bit of contraction, and U.S. revenues well, they both contracted. Look, am I reading this right? 3,335. Yeah, they both contracted slightly. So, somebody tell me, what's the 10x here? 1% account growth. Freaking joke, okay? PayPal, my snail, is a clown stock. Well, not a okay, I misspoke. Not a clown stock, but it's not. There's nothing special about it. Wow, I can send money 1,000 different ways. Oh, PayPal. Ooh, Bitcoin, bro. I can send money through Bitcoin. And PayPal's involved in crypto. What a freaking joke. Anyway, that's my thoughts on the earnings. The thesis still holds that this thing is basically dead in the water. They can only squeeze so much juice out of their customers. And this is a business that has basically peaked. But, Jeremy LaFave. Anyway, hope you enjoyed the video. Hit like, subscribe. Check out the pinned comment below if you want me to do your taxes, if you want to buy my book, Stop Being a Broke Loser, if you want to talk to me one-on-one, or if you want a sponsored video. And you have a wonderful evening.